Hello, welcome back. So today is Wednesday, 10th of September. I've just realized how the previous model I was teaching, the PO3 or the CRT thingy, how it happened very perfectly in USDJPY last week. Thursday, it was Wednesday, Thursday and Friday. Yes, so this is it, Wednesday, Thursday and Friday. Just a minute. Back. So this is the Wednesday candle. Tuesday gave us the range. If you're a CRT trader, you understand how this works, right? So that is the CR low and the CR high of this range, right? So if you're doing this, this becomes your target or your final target, right? And then this is the Wednesday candle sweeps the high of the Tuesday candle, which is pretty much the previous day high, right? So if this is happening, bringing my model here, this manipulation candle, it gives us a dealing range, right? So we expect the next candle will open and trade into the premium side of this dealing range and then drop to tag this previous day lows or the CR low, which is our final target for this print. Now this is Thursday, so this is Thursday and then Friday. On this Friday, which is the first Friday of the month, there was news, and this model goes ahead to show us that when you are on the right side of the market, news, NFP, this was NFP, I think, it should propel price into your direction. That means with the right technical analysis, if you are on the right side of the technical analysis, whenever you find yourself in the news situation, it should propel you to your take profit, which is now this. Anyway, so let us have a look at how someone would have participated in this trade. So this is now the daily time frame. We have the dealing range. We want price to trade into the premium side of this dealing range. So we highlight the premium side of this dealing range, and then we will we'll do what? We will remove this so that we clear up the charts a little bit, and then we want now to mark where this new day opened. This was Thursday, so Thursday new day open. You go to the 4-hour time frame and see what is happening. So you see that price opens on Thursday, opened where this candle, and then traded into the premium side of this dealing range. This is our premium. Let me call it the daily time frame premium. So daily premium, right? So price has come into this premium, but we do not know which zone exactly it will react off to go lower. So we go to the 1-hour time frame and find out, we see if we can find anything meaningful where price is reacting from. And then you'll notice we have this fair value gap. So this 1-hour fair value gap is the first area where price is likely to react from, right? And this fair value gap is inside the premium, which is one of the most important aspects of this model. So this is a 1-hour fair value gap. Now we want to go to the lower time frame, 30 minutes time frame, and see how price reacted off this 1-hour fair value gap, right? So we have these two candles closing outside of this fair value gap, and then at this point it is now giving us an idea of what we're supposed to do. So 30 minutes, the next 30 minutes, and then we have these two candles, right? These two candles with this final candle closing outside of this fair value gap gives us another dealing range. And now at this point, it is just a replica of what is happening in the higher time frame. At this point, what you want to see is price trade into, right, into the premium of this range, the premium of this dealing range, right? However, another alternative is to look at it again in the eyes of CRT again, right? In the eyes of CRT, we have this candle giving us a range, and then this manipulation candle manipulates higher, sweeps the liquidity, or manipulates this, the high of this candle, sweeping its liquidity and then closing below, and now giving us a dealing range. With this dealing range, we want price to trade into the premium of this dealing range and then drop, and that is what happened at this point. So this is happening inside a 1 hour fair value gap, right? So you want now to drop further, right, into price to see now where you would have taken a more perfect entry. So at this point, we are now looking for places where we can place a sell order, right, where we can execute a sell order. So you'll notice price flies, the next hour flies by, then the next hour comes and trades into this premium. And now you want to know where would we have taken a trade in this premium. So you go to the 15-minute time frame and check where we would have executed a trade in this premium. Very tiny, you can see it's a very tiny entry area, but we're just perfecting this area so that we can find an entry that gives us the best risk to reward ratio. So price drops, comes into this premium of this dealing range. You can delete this. There's nothing significant happening here, so you can go a bit further. Actually, before you even go a bit further, you can now actually, let me just return my dealing range, then this 1 hour fair value gap. In one of the models I've been taught by my mentor, you have a dealing range and an engulfing candle outside of this this fair value gap. We'll have a dealing range of this engulfing candle. In our case, it is this candle right here, this bearish candle. And then now at this point, when we have a dealing range like this, you want now to have one candle change instead of delivery like this, right? And then now you want to take an entry inside this zone where this 1 hour change instead of delivery. And you'll also notice it comes into our our premium of this tiny dealing range that we have here. Now this is the CR high of the 1 hour CRT model that we've just used. So now going to the lower time frame, now you want to see if you would have perfected this entry much further and see if this would have given us a better entry. So we have fair value gap inside this zone, right, just like that. Now you can remove this. This is the 5-minute time frame. You don't want even to go further than that. Price trades into this fair value gap and drops with an engulfing candle. This engulfing candle gives us another dealing range again. We are seeing the fractalness of price in this zone. At this point, you don't want to do anything else. You just want to execute a trade. Where are we executing this trade? The moment price trades into the premium of this dealing range, and it is at this point right here. Stop loss above this fair value gap, and now you want to place your targets, right? So this was Thursday at 12:25. We are executing this session around 12:25. So at this point now we want to get our targets. You remember the previous the previous day lows, those were our final targets. So you cannot get it here. Let's try and get it in the 1 hour time frame. Those were our final targets. You see these lows here, these are our final targets, right? So if you pull this tool up to this point, you have a 35.64R. But you would be bold enough to try and hold this trade like this, right? But because our analysis began on the higher time frame, which is the daily time frame, you have the liberty to hold this trade for as long as you want. You can see this was Thursday, Friday, all the way to Monday, and probably Tuesday. You see where it got on Tuesday, but you're targeting the final target is here, the CRT low of the Tuesday candle that gave us that range. So at this point, actually you would be a bit more reserved and just take profit at this point, which is still good enough, 19.47R, right? But that is just with refining this model. Now you can be a bit more conservative and place your stop loss above this 1 hour fair value gap. Placing a stop loss there and take profit at this point, you will have an 8.17 or a final target, a final risk to reward ratio of 14.48. Let us work with that. Now, at the beginning of this video, I said if you are on the right side of the technical analysis, whenever news comes, price should propel you faster to your take profit, right? So this was Friday, this was NFP. NFP moved price very fast to the lower side, and this tagged our targets and got to our target at around, this was at around 10 New York time. This is now during the New York session on Friday when NFP was happening. So that is the execution you would have taken on this model, and that means that this model works even on higher time frames, and you can use it actually to take scalping trades. And when you look at this trade right here, you can see we had a very tiny drawdown and then price went rushing lower to give us very good returns. So in the eyes of a person who is doing what, who is now or holding a position trade or taking this trade for the long term, target these lows and target these final lows here, right? That is a 19.2R over a span of how many days? This is Thursday, Friday, Monday, and then Tuesday. So on Tuesday you have a 19.02R, which is now 4 days later. So that is the model explained to you. This is just another example, but this time I've applied this model in the higher time frame from the new day, the daily time frame. So ideally, the idea behind it is you want to have, I don't know, it looks the same to me. PO3 and CRT look the same to me, or AMD. So the second candle gives the dealing range. And then in the lower time frame, you wait for price to trade into the premium zone. For price to trade into the premium zone of the dealing range. And then while in the premium zone, wait for price to react off a fair value gap or an IFVG, an inverted fair value gap, with an engulfing candle, and then frame your entries around the engulfing candle. That's it. So that is the model. This time the CRT or the PO3 is in the daily time frame. You want to identify this in the 4-hour time frame or the daily time frame. And then the low time frames is for refining this model further until you get to a place where now you can get an entry. That is it. Bye bye. See you next time.